Okay, latest data for this our buying power experiment, comparing trading against hoarding gold and silver. First off, I want to make something clear. Okay, because we've got some metalhead trolls that have been coming into the vids and going, "Oh, no, I'm not sure what this guy's point is and what he's getting at." My point is, you've got options of what to do with your money. In this experiment, we're showing a few of them. If you look at that purple line there, you will see that, God, we've had been in 3 months, okay, we've not only increased the buying power by trading, we've increased it pretty good over inflation. Now, to give you an idea of what we're doing here, you know, that I originally had a number of 236 for the CPI, which is shown in the dotted green line, and the loss of buying power of the US dollar. The number for April, the number for March wound up being 236.293. Now, I realize the consumer price index doesn't include everything, but the result that's going to have on this experiment is take whatever the consumer price index is reporting inflation as, and if you think it's larger, shift this chart down a little bit. If you think it's, and make that green line steeper. If you think it's smaller, you know, do the other. Make the green line a little more shallow and shift everything else up a little bit. My guesstimation for the May numbers, just based on averaging things out, is that it could be around 238. A little bit less, a little bit more. I was almost dead on with the March number. We'll see how I do at guessing the April number, but you know, increment like that is what I have the dotted green line out right now. As the numbers come in, we'll report them. If reporting things in buying power isn't enough to make it clear to the metalheads, you know, it's like, oh, you know, you're going to be sorry because you're not measuring your wealth in ounces. You're measuring it in worthless US dollars. And it's like, well, actually, no, I'm measuring it in buying power. You notice there's no dollar signs on the side of this chart. There's percentage signs. There's a 0%, and then there's negative percent numbers and positive percent numbers. And that is buying power. On day 0 of this experiment, we could buy X. Based on the consumer price index, the choices of what we could have done with our money: hold on to the cash, trade in the FX market, which is the type of trading I prefer to do, hoard silver, hoard gold, speculate in bitcoins. There's the choices shown here. I'm not really keeping a sharp eye on the other cryptocurrencies because the reality is, while on different momentums, they all more or less follow the same, oh dear God, speculatory swings right now. None of them are really excessively established. Bitcoin is the one that's closest, but also the one with the most rumination. So who knows? By the end of the year, everything may switch to the Litecoin. We'll deal with that if and when it comes up. I may adjust the experiment midstream to include Litecoins. But for right now, BTC is representing cryptographic currency. But if the loss in buying power is not enough to deter you silver bugs, let's look at it in terms of ounces. I didn't do a chart for this, I just did the math over here. Okay, for every ounce of silver that you didn't buy on day 0 of this experiment and instead put in the market and traded, as I'm doing in this experiment, you would have the ability to acquire 1.56 ounces of silver. So effectively, By not buying an ounce of silver, you get an extra ½ ounce of silver for every ounce you could have bought. So if your goal is ounces of silver, then not buying the ounces of silver fulfills your goal better than buying them. Sounds crazy, doesn't it? But that's the buying power resulting. Similar but not identical with gold. In the case of gold, it's 1.336 ounces. So basically, for every ounce of gold you didn't buy at the beginning of this experiment and instead shifted those financial resources towards trading, you now get a free ¼ ounce plus of gold. So you get more gold and more silver by not buying gold and silver. By increasing your buying power instead of stagnating and decreasing it, you could acquire more. So, I mean, if the metal bugs want me to keep rubbing it in their face and pointing out how many ounces of gold and silver they're pure, because this is a buying power experiment. I'm not measuring things in worthless dollars. I'm measuring things in buying power. How much more or less goods and services can we buy as a result of the choice we could have made? Me personally, I'm backing FX trading with my money, but I'm keeping track of across the board of all data. So even if your goal is to acquire little shiny pieces of metal, might you be better off to go through the intermediary step of first sticking your money through the blender that is the market so that you have more buying power to acquire more shiny pieces of metal? Might that intermediary step be a good way to go about it? Here's a crazy idea. How about you stick that savings that you're planning to stick in gold and silver and you trade it and you take the increase in buying power from the trading and then go stick that in the little shiny pieces of metal. You mean something that actually produces more? You know, nobody says you have to stay in one thing, but might it be important to put the seed base capital to work in a way that produces more buying power so that you can acquire more? Because the reality done in real life and pragmatism, I mean, for the purposes of experiment, I'm just kind of maxing it out. But, you know, it wouldn't be such a bad thing in practice to diversify that around. You know, say, okay, let me take half of those profits of an increase in buying power and stick them somewhere else and put them to work somewhere else. And, you know, repeat that process until I've got so many damn money trees that, you know, I'm effectively living for free. No cash has to come in because the cash I got in the past is now paying the bills of the future. That's been my goal pretty much most of my adult life. You give me cash, and instead of save or blow that cash, I spend that cash in a way that tomorrow I have a higher standard of living on less cash coming in. So if I have the same cash coming in, I can speed up the process, and if I have less cash coming in, I don't have to suffer because I can afford a higher standard of living on less money coming in. You know, crazy idea. Yeah, God's forbid. So that's what we're trying to convey here. I mean, here we're reporting the data. We're reporting the results of the activity of what I'm doing versus what could have done versus what the metalheads are telling you is the right idea. And I'm showing mathematically with these charts just how stupid their move is and how their move really works against them. It works against them even more if their argument that inflation is more than a consumer price index, which, by the way, I happen to agree with because it doesn't include certain things like fuel and food and, you know, other base things that everybody requires. So the reality is they're losing even more than this chart shows. And I'm not winning quite as much as that purple line shows, and the green line is a little steeper than it shows here. But for a universal measuring mark, as inaccurate as the consumer price index is, I mean, it's a universal measuring mark that we can do this mathematics on universally across everything to compare ratios. Okay, going forward with these vids, we're going to continue to do this experiment and continue to keep track of the results so you can put, you know, a no spin buy on what I'm going over in time here. But the end true goal with these is for these vids to ultimately turn into a tutorial to de-brainwash people who have been taught to blow their money on things that make them poor because a salesman told them to. I'd prefer people not do that. I'd prefer people make themselves financially stronger so that they can maybe do something. You know, maybe retire early, maybe enjoy life, spend time with their family. You know, these things are important. Life is worth living, god damn it. The things you need to understand to reproduce my purple line there. I'm doing Forex trading, which is basically trading currencies against each other and a few commodities here and there. I use the MetaTrader platform. You're going to need to understand the mechanics of how that platform works and the basics of reading a chart and understanding. You're going to need to understand some base mathematics. You're going to need to know how to understand. For those of you who have a full-time job and a full commitment, you're going to need to understand risk management, capital, you know, computing how much capital you really need to be comfortable risking. You need to understand your base psychology. The mechanics of a trader, not saying understanding your base psychology if you're more a swing trader or a scalper or if you're comfortable with hybrid trading. That's mechanics, but you need to understand the psychology of it. The other things you need to know is some base mathematics. I began covering on that on earlier videos. We got into, you know, like compound interest formulas and reverse computing certain things. At some point here, all of you need to know how to compute how much money you need to retire at the standard of living you'd like to, because you're Y age, you got X years to do it, so you need to kind of do a reverse calculation of, okay, official inflation is this, you think it's going to swing upwards of this, and you think all the stuff that isn't counted in it does this. That's kind of an educated guess. You're better off to overestimate than underestimate that. And then it's going to spit out you got X dollars to work with, you need to earn Y return. If those numbers don't make rational sense, you either need to figure out a way to adjust your finances so that you have more money to play with, or you need to become a much better trader or seek opportunities that can actually give you the return that it's spitting out you need to earn. So we need to go through that mathematics and how to adjust those things. We also need to cover the adjusting your base finances. My bills are complex. You know, it's people, they're really not, but I've come to learn in recent years, people have no common sense when it comes to how they do their bills. If I can afford to spend $1,000 on rent, I go look for an apartment that costs $500 to $800, and I put the other $200 towards saving and investing in things that ultimately generate an income as close to that $1,000 I could afford to spend, so that I then have $1,000 of disposable income to do whatever the hell I want with. You know, freeing up the money. The goal is I have higher standard of living tomorrow on less money today. You know, crazy concept, but the average person doesn't spend money that way. Every so often I go through my bills and I go, okay, I need this much money coming in to pay my base bills. Rent, power, internet. I need internet because I trade. No, it's not optional for me. I use it to earn my money. To earn my money, to run my business to do my things. I need internet. It's not a luxury for me. It's an expense of doing my business. And my goal is to whittle those bills down and take more and more of them off my plate so that over time, you know, I'm financially ahead. There's a mathematics to this. You know, there's at least a dozen gurus out there saying, well, you know, if you just did it this way, and so, but they don't explain the mechanics of it at all. It's a math thing. It's very simple mathematics. That compound interest formula I gave you is actually part of it, but there's just being given the formula, and then there's walking through the practicality, which is something we plan to do at some point. So I want some guidance from those of you who are watching these videos, actually wanting to learn, actually wanting to reproduce this purple line. Because the goal here is to ultimately create a tutorial that anybody can sit down and watch and basically learn to do this. That's the goal. So I want some feedback about where the place called start should be. Should we start with the bills? Should we start with streamlining and shaking out the budget? Because I don't want to talk in theoreticals. I want to go through actual numbers, do actual math, do actual stuff. Should we start with the mechanics of trading? Should we start with the mechanics of risk management? Should we start with some base questions you should be asking yourself to figure out psychologically what kind of trader you would make? And there's basically 4 kinds of trader. Swing, scalp, hybrid, which is basically my word for opportunist. You adapt on the moment. You're equally comfortable with swing or scalping, and you will adapt to whatever the market conditions favor. That's a hybrid trader. You don't really favor anything except what the market dictates at the moment. That's the most successful trader, but not everybody's cut out to do that psychologically, because it can have some crazy drawdowns, which can give people strokes and prevent them from being able to sleep at night. Which brings me to the 4th type of trader, which is you should never trade money. You should never be trading your money. This is somebody who, because of some type of psychological block, will never make the right decision when the pressure's under. So for them, they should find somebody who will make the right decision when the pressure's under and make out an equitable agreement. We also need to cover that. What to look for in a money manager. Because it ain't what people think. You do not look for a Mercedes or a Lamborghini or a BMW and all this shit. No, 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 no. For the gods, no. You look for somebody who's good with money and has a proven trade history. A proven trade history, 2 to 5 years of consistent. Now you want to look at what their average return overall over the course of 2 to 5 years in varying market conditions is. You want to look at what their average is. Not, oh, did they get 10,000 pips and make a blah % return on one day? You don't give a shit about that. You care what their long-term average is. You care about the fact that realistically you don't even have enough data to have a clue what's beginning to be an average with any less than 69 data points. You care about things like this. Because anybody can be lucky for a short period. It takes consistency to make a good trader, doubly so to make a good money manager. So that's my question to those of you who are regular watchers, who are subscribing, who are wanting this information. Where do we start this education? Where do we start getting into the actual mechanics? What I'm going to do in the in-between videos where we do tutorials, other things, I am gonna every so often do some why metalheads are dumb rants, just because they're fun, and they get the metalheads all stirred up. They go all a tizzy when you point out how stupid they are, and it's so entertaining. It really, really is. Alas, it's getting hot, and I got tired, and when it gets hot, I shave my beard, so they can't make any more beard jokes. I've deprived them of their pleasure. Not because of them, but because I'm hot. It will grow back. their fun will resume later in the year. And there's all the old videos with my beard that has come and gone over the years I've been on YouTube, by the way. And it's funny, you know, they all obsess so even when I'm clean shaven like this, they still obsess over my beard, not paying any attention to the fact that I recently shaved and don't have it anymore. It's funny. But I want to start adding detailed information. So what y'all want to hear of all the things I've covered that you need to learn how to do, let me know. This is going to be complex. There's a reason I'm running this experiment for 2 years, because realistically it's probably going to take a lot of y'all the length of this experiment to really learn in there. And we're going to try and hone these tutorials using the feedback from y'all. So, also, I've never used the live thing on YouTube, but feedback, point blank. If we did like a live cast or live trading session or something where, you know, we just had the market open, had a market or a pair open or something, and would any of y'all want to show up? I mean, it would be somewhere between the hours of 5 or 7 p.m. Eastern Standard Time to 3 or 4 a.m. Eastern Time. You know, that's really a productive time to trade a lot of things. So I'd want to know point blank. I'll do those if people will show up. But I'm not going to sit here and broadcast and do, you know, live trading sessions or other things like that if people have zero interest in it. And I'm not going to do it for like 1 or 2 people. Really, at least 50 people got to show up and ask legitimate questions and want to learn and be okay with me taping that, for it to even be worth the headache and the distraction. Because, again, I'm trying to hone a set of tutorials that will help people learn to do this. So, feedback, peace out all for now. We'll adjust this for official consumer price index towards the 15th of the month when the numbers come out, and give you the preliminary month numbers. There's going to be a lot of up and down, ebb and flow in this. We'll see where things go. And I look forward to helping those of you who want to learn. Those of you who want to bitch, I will enjoy poking back. You know, because y'all ain't going to rile me. You know, it's like, oh, I'm a beat today. Hey, oh, guys, I'm going to get sued by Carlos Mencia. I can't say that. You know, oh, yes, I am very smart and you are not so good. Yes. You are bad because you are pointing out that this does not make math. You know, why am I going to be insulted by that? The purple line is me. The brass line, you know, the brassy gold line is the gold medal heads, and the grayish silver line is the silver heads. The only people who got a prayer's chance in occasionally catching up with me is the Bitcoin people, if it goes through another Odoo Got Spike thing, but they better sell at the right time or they'll be right back down in the crapper with the metalheads. So, yeah. My results speak for themselves. Peace out, all. Look forward to helping as many of you as want to learn.